So, so value investing has been, largely underperforming for the last decade, right? If you're just buying on multiples, it
Mhm.
strikes me, and you can correct me if I'm wrong, that leveraging the cyclicality gives you an opportunity for outperformance. Has is that consistent with your thesis? Are you finding that you're able to make up ground with some of the cyclical trades?
Yeah, I mean, in the post COVID, we had such a dip with regard to everything that was supply chain related. Like that was a really asymmetric opportunity to play beta on prices to the upside, which culminated with the invasion of Russia and Ukraine. Global supply chains had to rejigger. That took 3 to 6 months. Prices went through the roof. Inflation went up to 10%. Now we're on the other side of that trade, right? All of those stocks have really kind of moved up. But the great thing about that windfall in terms of prices is a lot of folks paid off their debt. Their balance sheets are really clean. They can think about doing mergers. So these have moved from being, kind of like high beta stocks to being more, almost more like tobacco, back in the
Mhm.
day, where we're going to see, pretty good shareholder returns, buyback programs, uh, you know, high special dividends, because there's just not a whole lot to do with the money. There's not a lot of appetite for consolidation in steel or steel raw materials because finance really just isn't interested in those spaces at the moment.
So have has that sector been doing the same thing that oil and gas has been doing for the last few years, where they're cutting capex and just returning cash to shareholders, or is that a new
Yep,
phenomenon?
exactly. It's across the natural resources space. It's not just an oil and gas thing. Copper companies have done that. The first sector that I started working in, coal, has been like the poster child. Alpha Metallurgical Resources, ticker AMR, went from around $3 during the pandemic to as much as $450 here back in February when they reported, and that's largely been fueled the last few years by their buyback program, which has repurchased about 33% of the company thus
Oh,
far.
wow.
So, yeah, I mean, they obviously the timing really helped there, but going forward, they'll be able to kind of, uh, you know, eat themselves at a pace of about 5 to 7.5 to 10% per year, depending on where price comes in. And that's kind of across the natural resource space. You're going to find stories like that: oil and gas, copper, lithium, coal, iron ore, steel. They're all pretty primed to have a pretty good last half of the decade, we'll say.
And in Cabot turnaround letter, obviously natural resources are your bread and butter. Are there opportunities that you're seeing outside the natural resources space that are intriguing right now?
Yeah, so the same way that the natural resources cyclicals have a very physical, kind of seasonal churn through their inventories. Retail has that too. And if you think about it, the from the top level, you have raw materials for retail too. Part of that is denim sales, for instance, are highly dependent on the cotton cycle, and there are other sort of overlaps to those sorts of things. But like I was talking about, the focus should probably be on mid to large caps over the back half of the year. There's been a move, particularly in retail. There are a few retail stocks that I like that are kind of mid caps. Foot Locker is one. They had a great report here last time. They're beneficiaries on the other side of the supply crunch for Nike, right? Nike, I think, expressed about 50% of their sales through Foot Locker back in the day, and then they cut them off when supply got tight to focus on higher value downstream sales. Well, now the inventory cycle has shifted. Nike has a lot of supply, and they got to get that out to market. And Foot Locker is going to be one of the beneficiaries. So, when I look for cyclicality in other sectors, I look for the same sorts of things I look for, in natural resources. Is there an oversupply somewhere, and where is that going to get expressed? Who's going to be able to capitalize on those kinds of opportunities? Which, to Brad, to your point earlier, that's a kind of like short-term deep value look at
Mhm.
where the market is to extract some value from that cyclicality in the short term, and then kind of you can take a wait and see to how the cycle is going to affect it over the medium to longer term at that point.